Enter the credit card, a revolutionary concept that changed the way we manage money. It's not just a piece of plastic, it's a tool that grants us access to a line of credit. But how does this work? We're about to find out. In today's video, we're going to dive into credit card basics and understanding how it works. I'm going to share with you the fundamentals, how credit limit works, minimum payments, and demystifying credit card jargon. Stick around because by the end of this video, you'll be equipped with the knowledge to navigate the credit card landscape like a pro. Now let's get started. First, let's talk about the fundamentals. A credit card isn't just a piece of plastic. In fact, it can be a powerful financial tool if used correctly. At its core, a credit card allows you to borrow money up to a certain limit. When you receive a credit card, you're essentially entering into a contract with a financial institution. The card grants you access to a line of credit, a predetermined amount of money you can borrow. Unlike a debit card that draws directly from your bank account, a credit card allows you to spend money you don't currently possess, up to your credit limit. It can act like a financial lifeline that empowers a consumer to make purchases and transactions beyond their immediate cash resources. But just know, it's not free money. Let's break down the anatomy of a credit card and its structure. Your credit card isn't a magic wand. It's a carefully structured financial instrument. A credit card, at its core, has three main components. The very first one is credit limit. This is the maximum amount you can borrow using your credit card. It's determined by factors like your credit history, income, and overall credit worthiness. Number two, we have the interest rate, which is the APR. One of the critical elements of a credit card is the annual percentage rate, which is APR. This percentage represents the cost of borrowing money on an annual basis. Different transactions such as purchases, cash advances, and balance transfers may have different APRs. If you carry a balance beyond the grace period, you'll be charged interest on the remaining amount plus any additional fees. This is the cost of borrowing, and it can add up quickly. Managing your balance is key to minimizing interest charges. While credit cards offer convenience, they come with a cost. Understanding the financial implications is crucial. Aside from the APR, there are the annual fees and late payment fees. Some credit cards come with the annual fees for the privilege of card ownership. Consider whether the perks and benefits justify the cost. Missing a payment can result in late fees, affecting your credit score. Setting up reminders or automatic payments can help avoid this pitfall. Grace periods. Most credit cards offer a grace period, usually around 21 to 25 days. During this time, if you pay off your entire balance, you won't incur or pay any interest. It's like a financial breather, but remember, interest starts accruing once this period ends. It's important to note that while it might be tempting to make just the minimum payment, it's a financial pitfall. Minimum payments primarily cover interest, leaving the principal largely untouched. This can lead to a cycle of debt. The ideal move is to pay your balance in full every single month. By doing so, you avoid accruing interest and build a positive credit history. Now that we've covered the fundamentals of how credit card works, what aspects surprised you the most? Drop a comment below and let's keep this conversation going. Your insights might just help someone else on their financial journey. Now that you know the basics, it's time to know how to be a responsible consumer and avoid pitfalls. I'll quickly go over some credit card jargon so you are equipped to make smarter moves when it comes to acquiring your first credit card or having responsible credit card use. You want your credit card to work for you. How credit limit works. Your credit limit is like a financial safety net. It represents the maximum amount you borrow, and this limit is determined by the various factors including your credit history, income, and the issuer's policies. It's crucial to understand and respect this limit to avoid overextending your finances. It's important to know that your credit card usage directly impacts your credit score, a numerical representation of your credit worthiness. Being a responsible credit card user and keeping your utilization under 30% of your credit limit and making timely payments contribute positively to your credit score, opening doors to better financial opportunities. Now, you walk into a store, select your items, and confidently swipe your credit card. Let's cover some basic terms in the credit card world. Making purchases. When you make a purchase with your credit card, you're essentially borrowing money from the credit card issuer to complete the transaction. This borrowed amount contributes to your outstanding balance. Balance transfers. Some credit cards allow you to transfer balances from other cards. This can be a strategic move to consolidate debt or take advantage of a lower interest rate. Then we have cash advances. Be cautious with cash advances. They often come with higher interest rates and transaction fees, making them a more expensive way to access cash. As we wrap up this video into the mechanics of credit cards, remember that credit card is a tool that, when used wisely, can empower your financial journey, from managing daily expenses to building credit and enjoying perks. It's all about informed decision making. If you found this video helpful, don't forget to hit that subscribe button and join our community. Stay tuned for more insightful content designed to help you along your financial journey and equip you with the knowledge to set yourself financially free. Be sure to check out my next video on banking explained and how money and credit was created. Until next time.